Hi, this is Raman Gill. Welcome to episode 68 of the 10,000 Trades Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we'll take a look at 3 inside down chart pattern. We will look at where to enter the trade based on this, where to place our stop loss, and as always, most importantly, where to exit the trade with a profit. So let's move on to the charts now. We're looking at the 3 inside down chart pattern here. This is Euro Yen 1 hour chart. If we take a look at this setup, this is what we're looking for. In the 3 inside down pattern, we will normally see a bullish candle and then a bearish candle that closes approximately 50% of the body of the bullish candle and an engulfing bearish candle. So this is a pattern to go short on. So once we see these 3 candlesticks, the pattern is made up of 3 candlesticks. That's why it's called 3 inside down, and down just means that the price is likely to go down after this point. So once we see this type of a setup and the candle closes bearish here, nice engulfing candle, we can take an entry at the close of the candle. Stop loss would go up top here, give it some room to breathe, and we are looking for price to move down. As we can see, price goes down nicely here, and finally we come into support and resistance over here, and price starts to chop around without really going anywhere. At this point, we can exit the trade anywhere in here. So if we exit at the top here, from entry to exit, we have 100 pips in the trade, which would mean $1,000 if you're trading with one standard lot. So just to recap here, the 3 inside down pattern consists of a bullish candle and a bearish candle, a small bearish candle that comes to approximately 50% of the body of the first candle here, and an engulfing candle. So the 3 candles make up the 3 inside down pattern. This is a pattern to go short on, so the price is likely to move to the downside. Once this bearish engulfing candle closes here, we can enter the trade. The stop loss would go above the candle here, and make sure we have enough room for trade to breathe, and we are looking for a price to come down. As we can see, it flows down nicely. We don't really see a lot of engulfing candles here, bullish candles, so it doesn't really, there's no reason to get out of the trade till we hit this previous support and resistance area, and price just starts to move sideways. At this point, it's not going any lower, so time to get out of the trade. So from entry to exit here, we have 100 pips in our trade, which would mean $1,000 in profit if you're trading one standard lot. I do have a special announcement to make. I'm launching a new course called Demystifying Forex Fundamentals. One of the things that I've noticed is a lot of retail traders, we don't understand the fundamentals too well. I know most people look at the Forex Factory news. However, most people I find do not have a good understanding of what the news means and how the news drives the market. Over the years, I have picked up a lot of concepts through different courses I've taken and also through my MBA. So I feel like this is something that's missing in the market at this point. And to rectify that situation, I am launching the course called Demystifying Forex Fundamentals. And in this course, I will be going over not just the COT that I normally talk about in my weekly analysis, but I would also be talking about how to gauge market sentiment. I will be looking at how to understand the news reports that come out. What does CPI mean? What's GDP? And how does that impact the markets? How do the interest rate decisions impact the market? We'll also be looking at leading indicators and what these indicators are and how we can use them to make better trades. We'll look at intermarket correlations as well as currency correlations. We'll take a look at how to use equities to trade Forex as well as options data to take better trades in Forex. We'll take a look at US dollar index, as well as we'll take a look at different country profiles and also looking at what impacts their currencies, and we'll also take a look at carry trades.
So the price for this course will be $397. The course starts on April 1st, 2017. However, I am doing a pre-launch right now. And if you'd like to register for this course at this moment, the price is at $250, which it will go up in a week. For more information about the course, please visit tradingwithvenus.com/fundamentals. Thank you so much for joining me today. If you like this episode, please like, comment, and subscribe below. As always, it was a pleasure sharing these trades with you, and I will see you on the next episode.